Real estate, money, and the law. This is The Experts on AM 670 KMZQ, a show that talks about the issues that hit home and matter to you. Welcome to the Richard Husel Real Estate Hour, where you get the latest information on what's hot and what's not in one of the most volatile real estate markets in the country, Las Vegas. Join the conversation by calling 702-866-6700. This is the Richard Husel Real Estate Hour on AM 670 KMZQ.
We are live on the Las Vegas Strip. Got producer Jim Dallas. Got co-host Brian Ichikawa at the RatePro.com. It's just us three in here. This time last week, I was driving home from San Diego. I picked up a deal in Moreno Valley, which is kind of on the way to, you can get there through Palm Springs. You go past March Air Force Base. It was somebody I had already closed a deal. I'm selling their family and moving. But I got to listen to the Richard Husel Real Estate Hour on the Listen Live button. I called in for a minute. We talked, but it's just you and I here. We normally take that first segment. We talk about a lot of fluffy little things, but there are so many news stories and things that are actually worthy. We're only going to talk on one. World Series of Poker. It is a big boon for the economy every year here. Yes. Final table seats tonight on ESPN. Yeah. 7 guys. It started with 10,000. They take a little bit of break, then they televise it. I think it starts at 7:30 and doesn't stop till somebody wins. Everybody on the final table gets over $1 million minimum. Once they chop it up, they'll find. But $10 million, the highest grand prize for a winner right now. They get the bracelet, bragging rights for there. It starts tonight.
Yeah, $10 million goes to the winner, $6 million to the runner-up. So that's not too shabby if you're in the top 2. ESPN is broadcasting it live. And, of course, it's always a big deal to have the gold bracelet.
Sure.
Is anyone favored for this?
There's a 22-year-old pro that is actually in the chip lead right now. Brace your mic just a hair. So there's a 22-year-old, a young gun that's in there now. It's got the chip count, right? Having that as your ammo is always a big bonus in playing poker, right? You can get a few more bluffs in. You got a little opportunity to sit out the blinds and everything when you have that extra lead. But that's going on at the Paris.
At the Horseshoe.
Yeah, the Horseshoe. Final one. That's where it originally went. Then it got big and moved to Rio. And then Bally's, I think, bought it, and they've put it all together. They play between the two casinos, but that is going on. Switch gears a little bit. Trump's in town, and he may not be in town now, but he flew in today. We know that a couple of the conservative talk radio hosts took the days off. They did repeats. He was at the Red Rock Casino, and he is talking about the no tax on tips. And what else is he talking about related to economics?
Yeah, he's basically talking about the big, beautiful bill that passed, and no tax for seniors on Social Security, no tax on tips. So good stuff, and it's all related to finances, which is a big deal because affordability has been a real issue with not just the young people, with everybody.
We're going to talk about that affordability. Now, what was it, 2.5, 3 months ago? You and I are on the Kevin Walsh Show on Thursdays, and we had Secretary of the Treasury, Scott Bessent. We had 12 Secret Service people. That was the first day they were releasing the new so-called Trump bill for the kids. And I got to tell you, this is not a political thing. Our Social Security system is running out of money. By the time the age I actually get there, you'll be behind me, Brian.
2033, they say.
I look at that date and I'm going,
last.
wait, that's about when I would start drawing some money around, and it's going to be broke.
Right.
So this is a system where they take a small amount of money, but with the magic of compounding, kids that are very, very young, infants now born, are money into individual accounts given by Dell computers, and it's going to have kids are going to have 6 figures of money. They can't touch it. They can't go borrow and buy toys with it. It's going to be set aside with certain criteria there. But what a great thing! And he was sitting right where we're sitting now. We got to interview him, but so he was here talking about tax and tips. I think we're down to 88 days till the midterms.
And what a contrast it is, too, when you're talking about capitalism and compound interest, and you have the socialists out there, which are the Democrat Party. They're dominating right now, and it seems that they want to take from the rich and give to the poor, but the problem is you're going to run out of rich people, and everybody's going to be poor. All you have to do is take a look at Cuba.
So we're not a political show. Kevin Walsh Show tomorrow when I get to co-host with you.
Yeah.
No. We are political there, but let's draw this back to the affordability. What you're saying is very right. We just had some elections came out. Michigan, people that are behind, they're getting some good traction, starting from Adami. We talked at the beginning of the season, January, thought maybe it would be a bust for them, but it's getting some traction. The Socialist Party, and part of that is the number one issue with voters going into the polls in 88 days from now, whether you listen to CNN polls or Fox polls or any other one, affordability. Brian and I are going to be talking very briefly what he's seen on the mortgage side. He's getting seniors that are borrowing money for all the reasons you wouldn't do. Here's a stat. 31% of seniors over 80 have a full mortgage, not a reverse mortgage.
A regular forward mortgage.
We're old enough, guys. We're all over 50.
Yeah.
Parents used to work. Mom would stay home. He had a Bayliner boat. Maybe he'd go on vacation. Dad worked at the mill or did something, made $50,000 a year, and you could retire. You send kids and do it. Now affordability, we know, what is it, $119,000 to be able to buy the most basic house here, the average price home here.
Is that the number now?
It's one night. It was one. We saw the 111 as the average for the U.S. Now, the average for the U.S. is around 410. We averaged 490 here. I do want to appreciate Ticor Title, by the way. They are our partner. Totally appreciate them. I'm happy to say I'm putting a $10.5 million deal into escrow with them in the morning. Very pleased about that. They just closed a deal. My people I just closed with this time last week when I was in San Diego, they said, we're so glad you did Ticor. We know we're needy people. We're high maintenance. And Monica Reyes was absolutely wonderful. Got their money right away. If you are looking for a title company, nobody knows a title company, Brian, very often, unless you're an investor. Right? Nobody cares. But if all the prices are around the same, wouldn't you want to use somebody who gives you the best communication and the best service? And that's what I always get. So they're always our first choice. Let's talk about some things that are real news that are coming out, because it can be so confusing. You and I, in particular, we're always reading news stories, and you see news. Well, there's only 5,000 houses. Now, there's 11,000 average. Well, is it they're combining condos? Are they combining single family? I just saw a price that came out and said that the average 2 months in a row, as we know, is 490,000. But the same news organization, the Review Journal, reported as 425, where they said 490. It's very confusing. Or we're talking about combining condos and single families. That'd be considered overhaul housing. Or are we talking about just single family residents? So let's talk about where we are at and what just happened in the market. And you're the expert on the mortgage. So let's just talk about what happened. So the Federal Reserve just came out. Kevin Warsh is the new Fed chair for the Federal Reserve, took over for Powell, who infamously had disputes with Trump wanting him to do his bidding, and he just, they didn't go so well. So
I think some of that was personal, too.
Oh, yeah, it got personal. Yeah. Everything gets personal with Trump at some point. He's either your greatest supporter, and if you go the wrong way, I mean, we know what happens from there. But let's talk about what just happened, Brian, because we've talked about this multiple times every time we're on the radio. 6 months ago, the week before the Iran war started, we were looking so
really good.
5.99 average. What does that mean? That was the lowest rate we had in a couple of years. Looked like a great kickoff to the season. Then we bombed the heck out of Iran with the big, beautiful bombs. And now rates are up. Well, we just hit the mark of the beast on last week, 6.66 for the mortgage rate. But let's talk about how that actually happened. The Federal Reserve comes in and they give you, what they do is it's the rate that they lend, the overnight rate is for leasing, for credit cards and different things, right, Brian? And they had a vote. So while the Warsh is the chair, they still have a board to vote for. 3 of them voted to raise rates. What happened is the Treasury market, Brian, I always text you in the morning when we see these things, because Brian and I'll be working deals. I'll text him at 5 or 6 in the morning going, oh my gosh, did you see what the 10-year Treasury? I'll even look now. I know it's going to be bad. It's in this high rate. So when you see a 10-year Treasury rate yield at 4.6, 4.7, that means rates are somewhere around what, 6.5 plus. So what happened is the Treasury market thought that they were going to raise the rates 25 basis points this last week, and they didn't. So what happened? The Treasury went off to the rates went up significantly. It was not a great time.
Yeah, now it's 6 3/4.
You text me and said, boy, I'm getting all these alerts to do what's called reprice and alerts. You got to be telling your people when they should be locking rates and things. But the very next day, we got a little bit lower CPI. That's the Consumer Price Index. So what are we at right now? Well, here is a story. CNBC's today, there's an interview. The Fed's Kashkari, he's one of the Fed board members that's a voting member. He said, listen, our mandate for inflation is not there. Rates are high. We need to start raising rates at the very next session. Right now, if you look at the Fed's funds future, it's saying there's going to be 1, 2, 3 rates hikes by the end of the
year,
right? So why do we do this? This is to break the back of inflation. You and I we talk on the Kevin Walsh Show often about the fuel prices, right? I look at the same fuel pump all the time and looking. One day we think we're going to have I was reading a story today. It said that Trump said we're in great talks, we're almost there. And at the very same time, the same news organization said, we just talked to Iran, so we haven't talked in days, right? It's so much confusion. Are we doing it? The Strait of Hormuz, fuel prices are the biggest dominator for inflation.
Yeah, and it seems to me that, they're just running out the clock there in Iran.
Iran's trying to run out the clock, hoping that the midterms get here. It sweeps to the left side, and they call articles of impeachment, and they can get out and keep the regime intact.
That's their plan.
That is the plan. They are trying to run it out. There's a saying that Iran's never won a war, but they've never lost a negotiation. They're somehow they got something.
Well, okay, so knowing that, don't you think that it would be better strategy for Trump and his team for the perspective of looking at the future election, the sooner that you bomb the heck out of them, the better off you're going to be, so we can get back to normalcy as soon as possible.
Sounds good by me.
Yeah.
Sure. Whatever it is, the Strait of Hormuz, you and I like the Babylon Bee. If you have not seen the Babylon Bee, it's a satirical site. They've been on fire the last 6 months. They come up with a
lot of material.
Right, the satire, making fun of certain things. But one of them was Trump claims victory by having the strait reopened that was already open before the war started.
Exactly.
Right? It's like the win now is getting the strait open. Well, it was open. We were getting fuel prices where we wanted. We had things, right? I want to tell you a story. I want to ask you, we're running a little late on this break. Let me read you the headline. I want to ask Brian's opinion. This is something you probably have not heard of yet, unless you're a wonk like myself. The Fed just quietly injected $13.8 billion into the financial system. Most people have not heard of it. The Federal Reserve, through the repo operations, gave banks $13.8 billion for liquidity. Well, banks don't like to declare emergencies, and the question is, if they're having to give money, flood them with liquidity so they can relend it and put it out. That's got to be telling you something. We're going to run a little bit late on this segment. I want to come back and talk about this. I want to relate it back to a huge story related to condominiums and lack thereof affordability. Whether you're buying or selling, you need to know this news. The new rule came out nationally for August 3rd, came out yesterday. It's a big deal. We appreciate you listening. This is the Richard Husel Real Estate Hour. We're back on the Richard Husel Real Estate Hour, live on the Las Vegas Strip. Co-host Brian Ichikawa at theratepro.com. I asked you if you've even heard this story. A lot of people haven't. Now, I'm kind of a wonk. I follow the financial markets. I'm always like to be looking, just check CNBC, Bloomberg. I always listen to talk radio. Federal Reserve just pumped $13.8 billion into the banking system through what's called the repo operations. This is a way that a bank, they inject liquidity for you so you can relend the money and do it. The question is, why would you actually need to give the banks money? We keep seeing the stock market near all-time highs, and this is what, if you don't really understand the financial markets, can throw you off. You can see we're at all-time highs. You go, everything can be great. Well, it depends how they're measuring. Is it the Dow that only measures the top companies? Is it based off AI, which are absolutely screaming? Doesn't mean Wall Street is the same as Main Street. A lot of folks that we know kind of suffering a little bit. So why is the bank giving out all this money? Demand may be weakening faster than official data shows. Banks do not like to ask for emergency cash when the business is booming. Fed held rates last week, as we were just talking last segment. They plan on raising it. Well, what's happening right now, tell me if I'm wrong, did you just see the story said that we are at the highest foreclosure, NODs, which are called a notice of default. That's a pre-warning that we're going to do action. Then we got, trustee sale. That says a sale is coming. You missed the window to negotiate. We're near all-time highs, at least in the last couple cycles, right? Last 20 years.
We're high, but you saw the
nationally.
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 We're not too bad here, but...
Not too bad here. A lot of people have equity. We're going to talk about that in just a minute, about how many people have equity and ways to save a little bit of money. But they're injecting money, and that's got to be telling you something negative. So let's talk about what it means for everyday folks. If the banking system's under enough pressure to need $13.8 billion, it's probably going to come back on harder to approve mortgages. We've seen this before earlier in the year? What happened is they do these overlays where before you might be able to get a FICO score of 640 with it, and they go, you know what? things are tightening a little bit. Maybe we'll push that up to 660. The little tranche is going up.
That's what happens. Like you said, liquidity. As things get less cash, it's more difficult to just.
They want to loan it to people that
are
don't
less
have
risk.
to reap. Less risk. So auto loans are going to get tighter. Credit card approvals. You probably see fewer of the 0% teaser rates and things coming in there. So where do we know this story going? I don't know. This might be the canary in the gold mine that some things are going behind the scenes a little bit. But I want to get to something else. This goes back to affordability. The segue to this is condos, Brian, are what so many people, maybe they downsize. Maybe they're a senior. Maybe they're young and they're moving in. They look at a single family residence and, it used to be you go to a condo, right?
Yep.
They include all your water and your trash is in there. It's
all
a low
your outside
price.
Maintenance.
You might pay a $150 condo fee. You get a swimming pool. They paint the outside of the building. In fact, it even includes the insurance almost every time because it's shared. So you're typically stress the word about 20% under what a single family residence in the same amount because the outside of the building is done.
Covered.
So the new rule came out. If you have not heard this, we want to discuss the buy side and the sell side. The new rule is, this is stemming from 2021, the Surfside collapse in Florida that flattened, killed many people, an absolute disaster and tragedy. The new rules are with Fannie Mae and Freddie Mae, they want to have much more underwriting before they look at approving a loan.
No more streamlined approvals.
So let's talk about this. So you and I just closed a deal on Wigwam out in Henderson. I've had 2 deals on it. We got held off. They're looking at so we got a CIC resale package. This is a package that you have to give to a prospective buyer, and it talks about all the rules, but it also lays out the dollar amounts. It has to be out every 60 days before you close. The new rules are that a lender must preview everything, the previous maintenance of the building. They need to check for the insurance. They need to make sure the financials are good. What are some of the other things that the Fannie is mandating?
Well, that's what they were looking at is your insurance adequate? Like you said, when's the last time you had the roof done? When's the last time structurally they've been maintaining things? They want to look at everything, and they're not going to just turn a blind eye to it anymore.
So in other words, they're not going to just walk in with a VA loan and you have the money. We do something called a condo cert. This is the condo cert on steroids, essentially, isn't it?
Yeah, no, it's before we thought it was a pain in the butt. Now it's even bigger.
So let's talk about this. You're thinking about buying a condo because it is a little bit cheaper. Well, here's what happened. A condominium means a condo is short for condominium. You have what's called equal and undivided rights of everything out there. If you and I, Brian, we all own condos next to each other, we all own the rights to the pool equally, right? But we have our own individual space. Well, what happens when these overlays start coming in and they say there's not enough maintenance? You bought a place because you think it is affordable, and they say, no, there's cracks in the concrete, the foundation's bad here, or whatever they could be saying with particular
They're probably
building.
going to start implementing having more inspections done.
More inspections. Well, guess what your rules say in that CIC rules package that most people just blindly sign and do is they can start adding assessments. So imagine if you're on a tight income, you foregone a single family residence, you buy a place for $250, you think it's affordable. Next thing you know, a few months down the road, they start adding, especially older units, places that are in the 90s and 80s, 70s apartment complexes.
My sister got hit with that.
They can add $5,000 assessments per unit, right? They take the amount of units, $50,000 assessments. Now the HOA, they add that to your value. So think about it going this way. If they're raising the cost, the borrowing cost, and raising that on the bottom, and you bought in a certain price as a buyer, now what will happen is the market will equalize, it'll absorb it and see what's happening. You're going to start seeing some prices come down on many condo
in Florida. The special assessments are so big, people were what was normally $300,000, they were saying $100,000 just to get out of this thing.
So what we're talking about, do you remember when Florida was the hot market? Everybody's moving there and things. Well, condos, we know they have hurricanes and stuff. They changed the rules. Is it 10 years for a roof?
Yeah.
So it's 10 years. You have to get a new roof on your house. Very expensive, right? So what happened is the market looks at and says the cost of condos that were $300,000, we're starting to go to $100,000 because there's a place very affordable. If you buy it thinking your payment's going to be $1,600 a month, $1,500 a month, and all of a sudden they had $400. There's a 20% raise on your right on this. So if you're thinking about a price, I don't even want to do property management condos right now because your neighbor's problems become yours. I've got a place out by Nellis right now. I've got 2 of them. Got flooded on one. One was our fault, right? It broke. Our pipe broke. The other one, the neighbor's fault. They said they didn't do it. The condos are fighting. We've had the place for 6 months. Condos are a pain. Then they're getting more so in the age of them. You're more likely, especially a place that's over 90s, nobody changes their pipes until they break,
and then
right?
on top of that, when you buy it and it's a approved project at the moment, who knows what could happen in a year? And then you're stuck when you want to sell it.
I think they call this block busting, but I'm going to do it anyway. If you have a condo, it's this fear mongering, but these are the new rules. This went into effect. These are national rules, and they are going to apply to you. But if you've got a place, maybe you've seen your assessment. Now, we've had IInsureForYou.com, friend of the show, on many times. We've talked about how insurance has gone up. We talked about it stemming from the fires. However, it went back to Proposition 109 many years back in 89 in California. Insurance has gone up and up and up. And so we're talking about this with condos. If you're on that market thinking about it, wouldn't you maybe think of buying like the cheapest single-family residence you could buy, a regular home than a condo?
Or at least a townhouse.
Yeah, so let's talk about the difference between a townhouse and a condo. The difference is you actually own the land. We talked about a condominium. You own, undivided rights. But with the townhome, you actually own the ground. Townhome doesn't mean it's only one story or two story. You share typically the garage line in there. You think isn't these rules going to apply to the townhomes too? Or is it only to condos?
So far, it's just condos.
Yeah. So if you're thinking about a condo, so maybe you're sitting in one right now, you're like, I can't afford to have these assessments. So imagine your place starts doing these new rules. They start doing more inspections, more insurance. Their rules say that the HOA pass all those costs on to everybody. And then all of a sudden, your place goes down in value because people say, hey, that affordable place, my all-in HOA payment is now $750, and it used to be $250. And we're not exaggerating or fear-mongering. This is a big deal. You had a class. You had to have a meeting yesterday?
Oh, yeah. No, we had to listen to it right from Fannie Mae just to hear what they're going to do. And we were kind of expecting it. So several lenders already have things in place. So if you're going to buy a condo, before you go too deep into it, before you put an offer, before you do anything, we can screen it to see. It's just going to be one of those deals. Just stay away. So
you might find a unit. So we've got one. You closed the people. I'm actually got it up for rent. We just got our photos back on Monday. It's a super nice unit. I mean, really nice unit. They put new AC, new water heater, and new furnace all in it in the last 6 months going into the spring. The place is ready to go. However, the place was built in the 90s. Right, and so these other houses, and there were some delinquencies on there. I would think a little bit twice about a condo right now.
The delinquencies on that one were kind of unique. What happened was they had a special assessment, and they have your normal HOA. Let's say it was $200, but they had this special assessment for 1 year of $100. And so if you saw that in the mail, you said, "Oh, I'll just pay $300." That's what people did. They didn't make a separate check for the assessment, so people were. There's more of an accounting error. They were saying, hey, we got extra money in the HOA, but we have less money than we're supposed to for this special assessment. So they were showing us delinquent. And it was
so we got that through. It took a little bit longer to get it done. It was a little bit of difference. But what we're talking about, the assessments, if you're in a condo, you should be thinking about. We're running a little bit late on this break. We are going to talk about something else. What are we going to talk about when we come back? We got plenty still. We're going to talk about seniors and how many seniors are borrowing money for all the wrong reasons right now. We got some stats for you. We appreciate you listening. It's the Richard Husel Real Estate Hour. We're back on the Richard Husel Real Estate Hour live on the Las Vegas Strip. We love being on the Strip. We talk about the time, the Desert Diamond Arena. We might be right here. This might be an incredibly cool place with the inside the new NBA arena. If anybody other than Foley gets it, this is the number one site. The radio station will be there. Right now we got it easy. We walk right in.
Yeah.
We're going to have to stroll. We're going to get our steps in if we do, and we're God allows, and we are still here. But
we're only about 30 seconds away from the door here.
We're going to be about 10 minutes or better from there if we go from there. But that's a couple years out. But I want to talk about affordability and something that Brian's seeing. So I'm senior relocation specialist. I talked to this about Brian. We do things. We actually did a agent in place, a seminar at Sienna to Tora. We had a restaurant. And we invited people of a certain age. I advertise in Sun City, so we've been up there. We've done some lunch and learns. So Brian was with your lender, and he called me one day. He goes, hey, our lender said it'd be a great thing. The silver tsunami, as they call it, started to take the senior relocation or senior specialist with me. He goes, this is a 16-month court. What was it, 12 months or something?
Yeah.
And I was like, I told you it was a long thing. I've spent months in this. This is talking very specifically about seniors, the language to talk in a way that's not offensive. I'm getting older. We're all getting older. Some kid offers me senior coffee at McDonald's. I'm going to punch him in the nose one day and go to jail. I'm like, the first time that happens, and it's very close. I think the lady tried to hit me at the haircut place. I'm like, you know what? Those are things that offend you as you're right at that age, right where people start looking.
Years.
Like,
You'll appreciate it.
You'll appreciate it. Right now, it's like, I got enough money. I'll pay that extra $2. Do not call me that.
Yeah.
But we're talking about the affordability. I want to talk about something that means what we're seeing is people running out of money. We talked about the stat. 31% of people over 80 years old have a full mortgage. But what's happening is you're getting calls right now. He called me a couple of days ago and said, hey, I want to talk about this. All my calls now are from people that are true seniors that need money. Number one voting issue going into the midterms, affordability. Let's talk about the difference between a reverse mortgage. Here's what people think. They think, well, I'm a certain age. I'm not working now. I got to go just to a reverse mortgage. But you're seeing that people are actually borrowing money to either help their kids because they can't afford to buy a house. Average age, you see at 40, 50 years old to buy first homes now. You even have somebody who's trying to borrow money to fix their car so they can go get a job.
It's pretty extreme. It's pretty extreme right now what they're doing. But it's the people find me and then I'll look at their situation and they have like $30,000, $50,000 in credit card debt. And you say, how did this come? And you start looking at the statements and it's like, this doesn't look like you. I mean, a young guy goes to Lifetime Fitness and this guy's 80 years old. Right. And so I'm looking at this stuff.
Paying their kids' bills.
Yeah. So you're paying their kids' bills. And the kids are wanting to buy a house. And the kids say, oh, I need $300,000 to put down. So
I moved a lady in. We did a move with 5-Star Movers on Saturday. And she bought a house for her 55-year-old daughter, cash. In Siena, moved her out of the apartments up the street and doing it. There's another stat, something like 50% of kids are under 30 still live with their parents. Our one just passed his polygraph with the police department today. He's about to become a cop. He still lives with us.
Good.
We don't want him to leave, and our 20-year-olds live with us. It's hard to go by. Now, guys at our age, I was out of my house at 18. I moved to Hawaii. I moved on my own. It's very hard to go out and get a loan.
Yeah.
So if you're a senior, maybe you think you need a reverse. Maybe a HELOC's better. Remember, we're at all-time record high prices here in Las Vegas.
It depends on your long-term plan.
Let's talk about that. If you need it for bills.
Yeah, because you have your immediate bills you want to do up front. But that's why there's two mortgages, a forward and reverse. A forward, just like what you're used to, you got to make your payments. And if someone's thinking, how much can I get? Well, for every $100,000 you borrow, it's about $700 a month. Think of it that way. So $200,000, $1,400. $100,000, $700. And you can just calculate in your head. It says, oh, I can't afford that. Well, if that happens and you still want to give money to your kids or pay off your bills, do whatever, that's why they have reverse mortgage, because you might be equity rich, cash poor.
But here's something that I'm sure most people, maybe kids in their 40s, 50s, 60s, think about something for their parents that you may not know, probably don't know. You actually have to have a meeting, a third party.
That's
typically
right.
Somebody in the family to say, yeah, mom and dad have enough capacity to understand what they're getting, different than a HELOC where you can just do it. The HELOC, think of it as a loan. They're not kicking you out of your house. They give you that money. You can draw it all. Like you don't make any more payments. And the parents, but here's something else we want to talk about that I guarantee very few people know. It doesn't matter. Say you have a HELOC and mom lives to 95 or something, longer than the bank thought they were going to do. The kids inherit the home at some point, and if they're the heirs, do it. It doesn't matter if the house went up or went down. They base it off an appraisal. You can buy it at a diminished amount, if mom.
Yeah, that's for the reverse. So if the reverse mortgage, if the value, what happens is the payment you should be making gets added to your balance every month. And so eventually, who knows, it could happen where you owe more than the market value of the house. And if the kids decide they want the house, they're not going to want to pay
over market.
So that what the agreement is, it's 90% of market value. So if the kids want to buy it, they can still get a deal. The bank doesn't want the house.
There's things that you may not have heard of if you are working on something with your folks. You may be talking about money and things. Give Brian a call, ratepro.com with this. He'll get you some answers, show you what the best situation are. And, we're seeing this in the news, people staying with their parents longer, right? We just talked about people having mortgages. It's an expensive time. Food is up. And listen, I'm on the right side of things politically, but, when Trump gets me, when he says these things, there's no inflation. Well, maybe there isn't for you. You made $5 billion for you, but
right.
Average folks, even folks that make decent money, it affects you. It's expensive. Every time you go to Sam's Club, it's $300. Kids eat like crazy. It's expensive to do it. So people are borrowing against this. Get some good advice. You're not getting any younger. Pick the right loan. If you're not sure what to do, talk to somebody local. Talk to Brian Ichikawa, theratepro.com. Let's talk about some of the senior services. I just had my 2-year anniversary, Jim. You and I started doing things. So I've had people that call me. I'm on the air 13 and a half hours a month because I'm a co-host with you of the Kevin Wall Show, 2 hours a week. We're on an hour here. And then I advertise on Kevin Wall. I think that's 2 hours. Plus, I get 80 minutes of plugs for the show. I think it's a little over 13 hours. I have people think I've been on the air for 5 years. I've been listening to you. I don't correct them. They call me on the phone, right? So it's been a great thing. And I completely lost track of where I was going with that. The 2 years on
your
the air.
Services.
Where are the services? So when I got on, I thought, okay, it's just a commercial for me, right? I'm going to tell you why I'm the greatest agent in the world. I fix your house. I include your move and your boxes and all this. And I realized, as I learned as a green radio host, that people don't want to hear that every day, right? So we started adding guests, and we never really talk about it. But since it's just you and I here, we talked about the senior side for you. Let's talk about some of the service that we do. The reason we're doing pretty well in a market that's tight, affordability is
that's like when they're making that transition, like you said, like they're going to downsize or they're going to move to senior housing. Just getting someone over there to you hire them to help pack up.
Yeah.
You don't there are certain times people prefer to pack themselves, but you've had people that
they're
do
not when
them.
they're 75 and 80 and they've got a back issue and their kids are gone. So what we do, our service, and we have a moniker, we've had it for 11 years, one call, and we handle it all. And what do I mean by that? So we have a licensed, insured, in-house handyman service. Say you're a senior. This works for anybody. Everybody loves that we help, but we provide all your boxes, bubble wrap, and packing material. You don't want to put your little your tchotchkes and things and trinkets in a big, huge box. So we bring you the little tiny lawyer's box, all the foam pads you need, everything you need to wrap. But we also help with everything. If you need packing ladies, I'll bring the professional packing ladies over.
Well, you had someone a couple of times I saw they cleaned up the house for them. They did everything.
Cleaned up the house.
Decluttered it.
I just had a 40-yard box picked up in front of a $3 million house. Hopefully we do photos tomorrow. It is gone. We cleaned out all the extra house. We help with some of the selling. And what I find is the people that like our service that call me from the radio, they're people in my age, or they got parents in their 60s, 70s, and 80s. They're like, hey, we'd like a little bit of help. We'd like maybe a distance between the brothers and sisters. Can you come over, tell mom and dad what their house is worth? We'd like to hire, and you're going to take care of it. So what we do is we don't charge you any extra. I give you one flat rate. I put it in writing. I'm going to pay for your move. I'm going to pay for your boxes and packing materials. But what it really helps, especially with the seniors, is they have things they want to sell or get rid of. Maybe they need to ship them. Oftentimes we get calls, and it's somebody, whether it's been either a passing of the family or something. You got people coming from different parts of the country to help mom or dad get moved out of here, and they just want to be able to flip the keys. And if you talk to a regular agent, they don't do any of these things. So they say, who do you know? Oh, I know a guy. Well, we have a fleet of new 3-box trucks. We handle it all in-house. We absolutely do it. We can knock a house out for you in a week. In fact, we'll even take your boxes, go drop them off at FedEx or there and ship your things for you. You can pay for the fees, but we don't charge you extra for that. So if you need that, you need the type of service.
We don't talk about your marketing either.
Let's talk about our market. What do we do with our market?
Well, I work with other agents. I won't give their names, but they put stuff up. They use their cell phone to take a photo. Yeah. I mean, you put houses in a really good position.
So there's a house that just hit the market. It's got 11 photos. It's priced at $649. It's in my neighborhood of Amato. And they have 11 photos, $649,000 house. 3 of them are of a toilet. So and it's cell phone photos.
Is it a Japanese toilet?
And I thought maybe they just, wanted to rush to get the house on the market. Yeah. I screenshot the lead photo. It was a photo of a powder room with not even a powder room. It was just the toilet. I thought that's kind of odd. So I waited. I checked it again. I screenshot and remember it had 11 photos. They were all cell phone photos. Vacant house. There's no excuse. Sometimes you'll see it right. There's a tenant. You can't disturb them. So you take a few outside. Terrible marketing.
Well, they're using stuff from a previous listing sometimes.
Yeah, so we do the full-fledged marketing. We're doing drone photos. We're doing twilight. I've done 4 sets of twilight photos this week. And by the way, we're booming. We're running up on a break, aren't we?
Yeah.
We want to talk a little about days on market, what the real pricing is, and what you can do. I'm going to compare 2 actual addresses to you and tell you what is happening and what you should be doing to position yourself to get your home sold in this market. We do appreciate you listening. This is the Richard Husel Real Estate Hour. We're back on the Richard Husel Real Estate Hour. Appreciate our partner, Tycor Title, putting a $10 million deal. Will be in their inbox tonight. I'm sure they'll like to see that. I appreciate them very much. Let's talk about these numbers and how the numbers can throw you off. If you hear that we're all-time record high 2 months in a row, May and June, we'll see what the July numbers come out. That makes you think it's a great market, right?
Yep.
What happens is it's skewed numbers, fewer transactions, higher numbers, what we call a bifurcated market, the tale of 2 cities, if you will. The lower market, the very low price, single-family residence, $350, $400, very few. They're a great alternative to condos, right? And those are selling quick. Over $1 million, $1.2 million, $3 million plus. Got people moving here from California. We're up 16% in May. We're up, 13% in May, 16% year over year. We like to use month over month because it counts for seasonability on that high market. The market that is in the middle that has a bit of a dog is that 600, 800, 900, where people are very tuned to rates and things, right? That's kind of right. So I want to give you 2 examples. I'll give you actual addresses, and they're both mine. So the one that's bad is kind of my fault too, but 1548 Champaign. We listed for $460,000. We're on the market 9 days. Sent them the offer. We accepted $475 today. Only 9 days on market. No HOA. 3-car garage. Nice and clean. Ready to go. Ready house. We got that thing clean. The guy's a master electrician. Had everything standing tall, ready to go. Took great photos. We answered our phone and got it on market. He's thrilled about it. He had just retired, young guy, moving to Florida, is taking off. However, I got another house in Amato. I'm not going to give the address now. It's really nice. You and I have sold it. The people bought. We're on the market like 400-something days. The house is now. What happened is we overpriced the heck out of it. We said, we're not ready to buy right now. Let's price it. And, for that one person from California that loves it, right? That's what everybody wants to do. So we went on around 900. Now we're down to 725, and people are asking me, why has it been on the market so long? It's like that beautiful girl at the end of the bar. It's 50s like you, like, why? What's wrong with it? It should never be there, right? These are the calls. We've showed this house 77 times. Now, we've had offers over this list. The point of this is this house was cluttery for a while. They like to cook food. It didn't always smell the greatest and things. Did some things to kind of torpedo themselves here and there. Now we're working very hard, and we're very, very, very close to a sale. In fact, we have an offer being written. But the point of this is, yes, there's very high prices, but if you're lined up, if you're a buyer, you should go out and be making some offers. You are in the driver's seat right now. However, the high prices are telling you that some sellers,
yeah.
Just like my Champagne, 1548, we got over list for this house and very good. So what you need to do is prep your house a little bit. I'm not talking about going out and spending lots of money. I'm talking about cleaning up, make it smell good, make it look inviting, and do it. Get a good agent that's going to take care of it and make it look great.
And your pricing strategy.
What's the pricing strategy? Let's talk about that pricing strategy.
Because if you come out of there, like you said, too high, you only have one chance to make a first impression. So, like you said, everyone's asking you, what's wrong with this house?
So when we go on the market, what we do is if I got a house that's pretty and it's got great lighting and it's got spa and outdoors and things, we do twilight photos to show it all looking at nice with all the lights and the fire pits and the spa and everything. But then we do like a 7:30 shoot with the streaking light through the windows so you get a nice view. We do drone. We do the HOA. And I tell people, if we go all out, we just did a house. We just did an ice cream open house.
Yeah.
We've done 5 open houses, and we've only been on the market 11 days. We've gotten 2 offers on this house. It's $1,075,000 in a neighborhood. The average price is around $800,000, so it's above average. We're getting lots of views. But if you have a house and nobody's called you and you've got an agent that's given it your best on marketing, they're answering the phone, you're doing some open houses those first couple weeks, you're overpriced, plain and simple. There are still buyers out there. People are looking. Our open houses are getting a lot of people. And by the way, open houses, I believe, are more important than ever since the the rules for the August 17th of 2024 that say that you have to get a buyer's brokerage agreement. What the rule is, any agent can show their own listing. So a lot of times you're seeing unrepresented buyers going out there. So the open houses are pretty good in the first few weeks. Now, if you got a house that's way overpriced, been on the market for 90 days, the open houses
that
are a
one
lot
that we
less
went
effective.
to with the ice cream was pretty well attended.
Pretty well attended. We had 40, 50 people there. Now, that's in my farm. I've sold 40 houses in that neighborhood, and people come for the ice cream because they know we do a pretty good open. You came for the ice cream. You brought a whole slew of people. But the point is, the strategy is, I want to talk about days on market. You read the news all the time. What AM 670 does all the time, you guys almost always lead with some sort of real estate story for the news for the whole day. We're always talking about prices and the days on market. What a lot of agents are doing, I can give you a house over in West Vegas right now, or West Summerlin right now. She's been on the market almost 300 days. Every time you look at it, it says 6 days on market, 9 days on market. She gets her agent to do a W, which is called a withdrawal, full withdrawal, expires it, and posts it. So it's like if you got a couch, you put it on Facebook Marketplace. If you haven't seen it a day, you can't even find your own ad, right? Hundreds of new posts. So she's taking it off all the time. So what's happening is, you're seeing the days on market look pretty young for it. It's not young. It's not a virgin again. That house has been on the market cumulative days. You're seeing a big trend of that right now. This goes back to that buyer's market. You're seeing a lot of houses, and you go on the history on the MLS and look, they're pulling off. They're pulling it off. It's not a great market strategy. Get somebody experienced. Look at the real price. Have somebody give you a real price analysis. Get somebody that's good in your neighborhood. It's
not always Zillow.
Now let's flick the other side, buyer's side. You work with buyers, right? Get prepared. Get a good lender. Talk about how buyers
know that up
prepared.
front. You need to know how much your closing cost is going to be. So what we try to do is look at the house that you're looking at. We look at the property taxes, how much your insurance is going to be. We know what the lender fees are going to be, but we put all that together. And in this environment, you get a lot of offers as a listing agent. Most people are asking for closing costs, right?
So what you're saying is getting prepared so you know what you actually need. So what happens is when you do the offer with an agent, they haven't actually prepared themselves with somebody like you, because you look up the property tax, you look up the HOA, you're looking that all up. Pretty simple things to do. A lot of agents skip it, or they go on to one of the online portals. They don't ask that. All they do is look, how's your income? How's your credit? You're qualified, right? They don't look at the whole payment and things in depth because they're doing it on the borrower, not property specific. So when I text you and I'm with somebody, you actually look this up. That way, when you make that offer and you're beating them up a little bit on price and you're asking for closing costs, you're better prepared so your offer can be the best offer you put forward.
It's better to say, hey, I accept an offer where they have to pay closing costs and it come down $15,000. Because it doesn't have the same impact.
Now, we're still getting very high prices. People have equity. You can ask for, we're talking about closing costs is maybe you're buying an FHA priced home. It's only 3.5% down. What's shocking to a lot of people when they first buy a house, they go, I got 3.5. I need 10.5 on a $500,000 house. Then they find out they need 2% on closing costs or whatever their particular situation is. And they're like, I don't really have that extra money. It was hard enough to come up with 10,500 to get in there. Well, we're talking about those closing costs that are borne by the buyer. We're asking sellers for it. If they work with you, you're going to prepare them and show them exactly what they need for that particular home. Because if you're buying a house with no HOA, it could be a lot different than if you're buying a newer home with an HOA, right? There's different fees, different insurance right there. What do we got in our last couple minutes, guys? We talk about property management. Let me talk about this for a minute. It's getting harder and harder all the time to do it. There's new rules. You can't accept application fee money and hold on to somebody's money and approve somebody else. There's different things that you can really get yourself whacked. We have all-in property management. I will tell you, nobody is doing it to this extent. I got an 8%. Here it is. Let me tell you what I include. I include seasonal. Every quarter, I do free maintenance on your house. Licensed insured handyman. We've been in business since 2018. They're going to service your house. Even if it's not broken, they're going to do garage doors, clean things up. We even take care of all of your emergency repairs, all the labor, no extra charge. Discounts on your AC. We take care of it all for you for the same price as everybody else. You can't not beat it. If you want to talk more, got the ratepro.com. I will see you, Jim Dallas, tomorrow on the Kevin Walsh Show from 1 to 3. We appreciate Ty Court Title as always. Appreciate you listening. This is the Richard Husel Real Estate Hour.